Let's talk money.
Hello and welcome to Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, all those of you who like to trade or invest in stocks directly, this show is for you. Listen up and pay attention. Sebi has changed the rules that govern transaction charges applicable on stock buying and selling. The regulator has directed market infrastructure institutions, MIIs, basically these are brokers, clearing corporations and depositories, all of them to discontinue the practice of levying charges slab-wise based on the volume of transactions which are being generated. The market regulator is batting for a uniform set of charges. To discuss how this could potentially impact retail investors, we have with us a full panel today. I have with me in the studios Ashish Rathi of HDFC Securities, Jimeet Modi of SAMCO Securities, and Shripal Shah of Kotak is joining us remotely. He's with us on Zoom. So, gentlemen, thank you very much for being here. This is an important issue. We know post-COVID, retail has pretty much taken over the streets, right? And a lot of it is direct investing and trading. So we need to understand this. So let's start with the basics. Jimeet, what exactly has happened?
So, just to give you a little bit of understanding, so far exchanges, depositories used to charge brokers a slab-wise pricing and volume-based discounts were made available to larger players. So, for example, 3.25 rupees per lakh of turnover in the cash markets was the prevailing rate. So, every time you made, let's say, bought stocks worth 1 lakh rupees, you would see an exchange transaction charge of 3.25 appearing on your contract note. Now, that was the rate that a broker would levy you on your contract note. Now, how would the exchange recover this from the broker? The exchange had slabs that up to 1,250 crores of turnover, the broker had to pay 3.25.
Right.
For the next 1250 crore, the broker had to pay 3.2. For the next 1250, it had to pay 3.15, so on and so forth. So the exchanges offered a slab-based discount.
Right.
And but the end customer still was charged at the highest slab, which was the 3.25. Now the difference, so you know, at the end of the month, everybody used to get a bill from the exchanges that okay, you got to pay 2 crores, 5 crores, whatever.
Yeah.
And the brokers had actually recovered an X amount from clients, which was usually a little bit higher than the bill that the exchange
that they owed
had.
To the exchanges.
Correct. Okay. That difference was something that is called as a rebate on transaction charges, which was the income, which was an income in the books of the brokers.
Sure.
And this was the model that was followed so far.
Sure.
Now, what's happened is Sebi has directed the MIIs that now you can no more offer these volume-based discounts.
Correct.
You decide what's a fair rate.
Right.
You know, right now you have rates from 325 all the way to 3 rupees. You find out what is the optimal number and levy all brokers a single flat rate.
Irrespective of the kind of volume that that broker is doing. And I think that's where things get really interesting. So Ashish, let me bring you into this as well. Now, on the face of it, you'd imagine that, okay, you know, mujhe kya farak padta? This is something between brokers and the exchange. But it's not that, right? Because at the end of the day, the client, the end investor or trader is also impacted.
Yes, to be very frank, I think so. The brokers were charging to the client, which is a flat rate, which was obviously on the higher side. And after rebate, they used to get a discounted rate. Now, what happens by virtue of this Sebi changes? Sebi has asked them to keep a flat rate and the per unit mechanism should not change. So, obviously, if you look at the charges which now the broker will do to the customer, will obviously reduce. So, for a customer, if you look at the transaction cost by virtue of this circular, since it's a practice to charge the highest slab rate, the slab rate should come down to weighted average, some number which is actually lower than the existing number. Okay. So, that actually benefits the customers in terms of whatever volumes they do, whether it is equities, derivatives, options, whatever they do. So, definitely for the customer, it tends to be beneficial. Now, the quantum is depending on the volume of the customer.
Absolutely. Mr. Shah, let's get your opening thoughts in on this. It's a little technical, but going by what, for instance, Ashish is also explaining that typically, at least at the transaction charge level, we customers stand to benefit, don't we?
Yes. Thank you, Surabhi, first of all, to inviting me for the show. See, these changes are actually one more move by the regulators towards transparency in the broking industry. Today, broker is able to charge transaction charges to the client, but broker ends up paying little lower than what actually they charge to the clients. It is not as transparent as the new regime would be, where broker would exactly pay to the exchange what exactly it recovers from the investors. And SEBI also has come out with the recommendations in a circular saying exchanges or MIIs should consider what is the current weighted average being realized by them and decide the new pricing, which should benefit reduction in charges for the investors and clients.
Sure. Okay, you know what? Let's do one thing. Let's simplify this for our viewers with an example. So actually, what is this slab-wise system that's currently being followed? It's a good idea to look at the current system, and then we'll talk about the changes. So the current system, whichever exchange, I mean, if you're looking at the NSE or the BSE, they follow a slab-wise structure. How do they decide how much to recover from brokers at the end of the month? This is a structure which the NSE is following for the current financial year. So you can see here that up to 3 crores is a flat charge of 2,500 rupees. And by the way, this is on the volumes and the turnover being generated from the option segment. This is what we've taken up as the example for the option segment. Why options? Because that's where the volumes really are of late. Now, we can see that as the turnover increases, we're starting with 3 crores going all the way up to 2,000 crores. As the turnover is increasing, there is a rebate. The highest slab is here, 49 rupees 50 paise. But as the turnover increases, it comes down to 47, 42, 37, and then 29 rupees 50 paise is the charge for turnover for brokers who have turnover of more than 2,000 crores. So that's how it's slab-wise. It's a bit like our income tax rates and how we calculate it slab-wise. Let's take an example. What does this mean for you and me, and what is the broker paying to the stock exchange? So here's an example. Where the broker's turnover, let's say, is about 3,000 crores. Again, I'm saying this is for the option segment. Now, the fee that is charged, and it's a uniform flat fee that the broker is charging to their clients. Usually, the industry practice is that they take the highest slab, which in this case is obviously 49 rupees 50 paise, and all clients are charged uniformly at this rate. So, how much does the broker recover from us, the clients? The amount would be somewhere a little lower than 1.5 crores, so 1.48 CR. How much is the amount due to the exchange? Because of the slab-wise structure, like we do in income tax, you know, it's all slab-wise. So going by that calculation, the overall picture or of the overall sum here comes to 1.23 crore rupees. The difference between these two figures, that basically is the income for the broker, which in this case, roughly rounded off figures, comes to about 25 lakhs. So this is just one example of what the industry practice has been till now. But Jimeet, that's the question, right? So if we look at it as a fair principle, it sounds absolutely correct. The market regulator is saying that don't take the differential now, the 25 lakhs, and make sure that you pay to the exchange what you're collecting from clients. So isn't it fair?
Yeah. So as Shripal ji said, that from a transparency point of view, yeah, that will increase transparency in the ecosystem, because today, let's say the exchange's average weighted average rate is about 31.5 or 32. The exchange will come up with such a number such as 32 or 33, and then because it's going to be a flat rate, brokers will levy the same rate to the end customer. So yes, I think from a transparency point of view, I mean, that will go up, trust will go up. There will be an impact on broking revenues, but in the interest of the customer, it's a step in the right direction.
You know, it's a step in the right direction, but I think that's where we have to pause, because while it sounds fabulous and it sounds great news, it may not be as great as what we initially think. I mean, as customers and clients and people who are trading in the market. And the reason is that the transaction charge is only one charge that we have to pay up. As customers, there are other charges. There's the brokerage charge itself. And Ashish, therein lies the question. So you told us that in all probability, the transaction charge that I have to pay will go down. What happens to all the other fee and the other charges that brokers collect?
So the other fees and charges which the broker collects, I mean, apart from brokerage, stamp duty, investor protection fund, Sebi turnover fees, GST on that. So those are more or less standardized. So over there, what is going to come in terms of the exchange transaction charge, it's the same. So whatever is being collected is being paid out to the authorities, whichever it would be. It could be Sebi, it could be stamp duty authorities or whatever it is. Only this transaction charge was different. Now we will have to see how brokerage charge changes. Now, because out of this transaction charges, brokerages were earning money out of it. So when the numbers become large, I think so the number which the broker was earning is also fairly large. While you gave an example of 25 lakhs, so it could run into hundreds of crores. So that is how the numbers. Now to offset this revenue, I mean, obviously this revenue will go off from 1st October 2024, whether brokers will increase the charge or not. Now many discount, I mean, we had seen some of the discount brokers coming saying we will have to increase the charge.
Yeah.
So if that increases, so the overall transaction charge to the customer might still continue to remain the same. So we'll have to wait and watch once the exchanges declare the charge, how do the broking community react?
Well, the broking community has started reacting, and I think one of the biggest players on the discount broking side, which is Zerodha, we already saw that quote come in from Nitin Kamath. He put out a tweet, and I just want to pull that up so that our viewers are aware of it as well. And he doesn't mince words, and he was very direct, reacted immediately once these regulations changed. Let's pull out Nitin's quote if we can, where he's saying, we've got it on the screen right now, and he's saying that we were one of the last remaining brokers that offered free equity delivery trades. We could do this because F&O trading revenues were subsidizing equity delivery investors. But with the new circular, we will in all likelihood have to let go of zero brokerage structures and or increase the brokerage for F&O trades. Brokers across the industry will also have to tweak their pricing. We'll pull up the second quote as well, where he's talking about how the global practice has been this slab-wise structure. But the short point is, Nitin Kamath is saying that zero brokerage could perhaps be a thing of the past. Jimeet, how do you view this whole situation?
So I agree with Nitin in the sense that the difference in this transaction charges, even on delivery trades, even when delivery trades were free, the difference in the transaction charges was actually subsidizing the brokerage rate. Now, since that differential has gone, at an industry-wide level, we estimate that this pool of revenue, which straight goes into the PBT, is about 2,500 odd crores. So the industry is going to find a way to recover this, because the cost structures of the pool are not of the industry are not changing. So our estimate is that, as Nitin said, brokerages will go up, and at the end of the day, nobody wants the end cost to the customer to go up. But I think everybody's going to find a blended optimal rate, where the decline in the transaction charge will get offset by the increase in the brokerage rate, and net cost will remain the same, but there will be a reclassification of the charges that a customer pays.
So you're saying, okay, so we've got 3 broker representatives on the panel, so I couldn't be happier. So let's say at SAMCO, and I know that you'll wait for the exchanges to declare their new rate, but you're saying that there could be an increase in brokerage, but a reduction in the transaction charge. So net, I don't get impacted. Is that what you're saying?
Yeah, I mean, we'll try to keep it that way.
Okay.
So that, I mean, at the end of the day, there is no
hit to
the customer. And if at all, I think there will be a marginal decline in the overall cost. It's not that the customer is going to end up paying the same or more. But yes, there is going to be an increase in the brokerage, because this pool will have to somehow get this gap of 2,000 odd crores at an industry-wide level, somehow will have to get filled.
Okay, fair enough. And those are SAMCO's calculations that the revenue implication for the entire broking industry could be 2,000 crores because of this change. Ashish, your thoughts? Will brokerage go up? Will overall costs go up? Everything put together.
So it depends on the value of the trade of the customer also. So if he is trading less, then the cost could go, and the number of orders, because now the brokerage charges per order basis. So if that goes up, it depends on the value of the order also. But definitely, depending on what the exchanges come up with the pricing, then the first move which the brokerages make, that will decide actually. So the order value, as well as depending on the final rate which the exchanges come up with, these two will have an impact. And depending, I mean, that will obviously make a decision point for the brokerages also.
Sure.
How much to increase, whether to increase, not to increase. That could also be a situation wherein brokers say, okay, we'll not increase the prices. That
because
is also
of
possible.
competition.
Because of competition.
Okay.
Market forces, they are making enough money in F&O to offset these. That is also quite possible.
Okay.
But this is how things stand today.
Mr. Shah, what's the view at Kotak Securities? Are broking costs going to go up? Overall, I'm talking about total cost for the client.
No, I don't expect total cost going up for a client. Overall, as we understand, this income which was being made by the brokers by way of turnover rebate was around 10 to 20% of the total income of a broker. So there would be few brokers who would be increasing their prices to offset this loss of income. There will be some brokers who might not pass on this by way of raising the brokerage. So clients will have a choices to go to and maybe find a broker where the transaction cost has gone down, but brokerages have not increased. So it will be fairly easy to assume that client will be finally a beneficiary of this.
Okay, we like the sound of that. Whatever happens, as long as clients are beneficiaries, we'll take it. Need to take a very quick break on that note, but the conversation continues. And also, what's the road ahead for discount brokers? And as customers, what more do we need to be aware of as this landscape on charges is changing? Back in just a moment.
Let's talk money